Hi, my name is Ben Shepard, and I'm the editor of Lewis Rukeyser's Mutual Funds. Mutual fund investors usually fall in one of two camps. You have the passive investors who rely primarily on index funds, where a lot of changes aren't made to the fund's holdings. Really, all it's doing is replicating the performance of some benchmark index. And those investors typically try to perform on par with or even outperform the broader markets based predominantly on asset allocation strategies. The other camp are the active investors. They go with mutual funds with managers who are relying on their stock picking abilities to generate gains. And with those types of funds, you're betting that your index manager knows more about what the market's going to do than the market does. And then you have the third camp, or a third camp, where investors use some combination of the two methods. A common occurrence with the active managers, though, is after particularly extended periods of outperformance or even underperformance, they're going to become index huggers. They're going to start replicating some benchmark index with their portfolio. In the case of the underperformers, to try and bring things closer to the middle to make their fund look better, or in the case of the outperformers, to bring their fund closer in the middle to try and keep it from looking worse. And if you're using an active investment strategy, that's really that can be the death for your portfolio. That's going to generate mediocre results, and it's really just not going to do a whole lot for you. One trend that we've been seeing in the mutual fund industry over the past 15 years or so is the growth of focused mutual funds. These are funds that typically have less than 50 holdings in their portfolio. More usually they're going to run somewhere between about 20 and 30. And the idea behind this is that these funds are made up of the manager's absolute best picks, his best ideas, what's just going to absolutely just blow the roof off performance. Granted, that doesn't always happen. With a concentrated portfolio comes more risk, simply because since they're not as well diversified, if one holding takes a hit, the entire fund can be drugged down. So when you're looking to invest in focused mutual funds, you want to go with a manager that you have the utmost confidence in, that knows what he's doing and has a proven track record to really back himself up. Two of our favorites in the focused mutual fund universe are the Jensen J Fund. It's managed by Robert Millen and a team of, I believe, 4 other managers. And what they do is they look for large cap companies with market caps over $1 billion that have generated 15% or more return on equity over 10 consecutive years. So that really leaves the fund with some very large blue chip names, but with the recent crisis, only about 150 companies actually passed that screen. So out of those 150 that passed the screen, they whittle it down to their 50 or 60 best ideas. Given that value focus, the fund occasionally falls out of favor, and when the growth names are just really surging, the Jensen portfolio tends to lag, but it really has an enviable long-term track record. Its 10-year annualized performance beats the S&P 500 by more than 20%. And that performance comes fairly cheaply with an expense ratio of just 8.6%. Another favorite that we have is the Ameristock Fund. And again, it focuses on blue chippy names, but it takes a bit more of a value approach. It looks for companies with market caps of at least $15 billion that are trading at lower PE multiples and lower price to book values than their peers, and also have higher than average dividend yields. So that leaves the fund yielding just a little over 6%. Again, it has its good periods and its bad periods, but over the longer term, it has outperformed the S&P 500 by 10 to 15%. And just one interesting fact is that the manager of the fund, Nicholas Gerber, also manages the United States Oil Fund. So he, the crude-focused ETF that has been all the rage the past year or so, that's managed by the same guy. So if you're looking for a focused mutual fund, those are the two that we would go with, and they're by far our 2 favorites.